Hope you're doing well, everyone. Welcome back to AZ Trading. As you know, yesterday was a very high impact news day. We had the ADP, PMI, and we also had FOMC. And for the rest of the week, we have some even more volatile news events like the monetary report and NFP on Friday. So this will be a very dangerous week for day traders, especially if you're not flattening your positions prior to news or if your risk management isn't up to par. So yesterday, before the day began, we had some very key areas of interest. We had two sets of equal lows down here that look very clean. And we also had a set of equal highs over here, as well as a daily equal high level, which you can see over here. And long story short, after FOMC was released, you can see that those daily equal high levels were raided. And the trade that we managed to take wasn't a long to those daily levels. However, we were just targeting those short-term equal highs. And I'll just turn on my executions and the labels so you can see that the button was indeed pressed. Where you can see this is where we placed our long entry. We had our stop loss below this swing low and our take profit at those equal highs. And capturing this move was a 1-to-3 risk to reward ratio. In hindsight, I could have taken off a partial at this equal high level and let my winner run to those daily equal highs. However, since today was FOMC, holding a position during the release of FOMC is just something I do not do. That's just part of my trading plan. And in this example, you can see that I would have been stopped before the move. However, even if I didn't get stopped on FOMC and price just pumped to those equal highs, before the release of the news, I would have flattened my position and got out of the trade. Because during these highly volatile news events, you really don't know what's going to happen. Even when you have such a clean higher time frame objective so close, you can never be 100% sure, and I'm sure you can agree, you can never be certain what the market's going to do. So that's why during high impact news, before the release, I always flatten my position. Alright, so let's get into how I found this trade and the entry pattern that I use so you can find trades like this one in the future. So in the community Discord, I've left a little exercise in the announcement section where I've asked a few questions that'll get you thinking how we could find this trade. So the first question I've asked is to find a bullish RMR pattern to target those equal highs prior to FOMC. And you know that the RMR is the pattern that we use for our trades. So first we look for a raid, and underneath all these lows, the liquidity has been left untouched. So as soon as price breaks through those lows, we can call that the raid. After this bearish raid, we wait for a bullish market structure shift. Price breaks this swing high, so now we're short-term bullish. And finally, after the market structure shift, we don't want to participate during that shift because we're not getting a very cheap price, we're paying a very expensive price, which is why we wait for the return area. And there are many ways you can find a return area. The most common ones you can use include a gap that's been presented over here, or an order block, which is over here as well. So as soon as price has retraced into our return area, that's where I placed my long. And of course, once you've placed your long, you can't forget about your stop loss. I've got mine at the bottom of the raid and my objective above. And once you've got your position, it's completely up to you how many areas you'd like to take partials and how much of a partial you'd like to take off. However, in this case, I decided to chunk my entire position and to take off everything at the one main objective, which were those equal highs. All right, so we've just outlined a bullish RMR. And the second question is for practice, just to find as many entry methods as you can. So as many return areas as you can. And after this, I'll talk about an A+ criteria, which is an RMR within an RMR. All right, so entry methods, we've already outlined two of them. One of them, which is a 1-minute gap. Another is a bullish order block over here. If you're not using any of those, you can use a fib. So if I drew a fib from the bottom of the raid to the top of that market structure shift, we can see that underneath that 50% level, as soon as price retraces in here, then that would be a fair price to go long or a discount in price. So that's another entry technique. And if you look towards the left, we also have some key areas over here. We have a 1-minute gap over here. We have a larger bullish order block. We also have this bearish order block over here. Once this bearish order block was disrespected and pumped through, this order block has now failed, so it is now turned into a breaker block. So what that means is once price retraces into that breaker block, this could also be an entry method to go long. And the purpose of this breaker block is to help mitigate losing trades. What I mean by that is this bearish order block would have enticed many smart money traders to go short. And we know that smart money traders or institutional traders, they don't use stop losses because they have very large pockets. So without a stop loss, as price is pumping, their positions are now in drawdown. They're at a loss at the moment. And so when they're at a loss, when will they get out of their position? Are they just going to get out here? Are they going to get out over here? They're going to get out at a mitigation area or a mitigation block. And so this bearish order block area, as price goes into that area, this is where they'll mitigate their losses. And so that's where they'll get out of their longs. That's just a little bit of theory if you're interested. So long story short, there are many entry methods you can use. However, for me, I just stick to a gap, order block, or a fib, and whichever one looks the cleanest is the one that I'll use. Okay, now I'll talk about A+ criteria and why this trade was a high probability trade. And in my A+ setup video, I mentioned if you find an RMR within an RMR, it is a high probability setup. So for this trade, we see this bullish RMR example. However, if you look to the left, we also have a raid over here. We have a market structure shift, and we have a gap or a return area over here. So when price retraces into this return area, that can also be our sign to go long with our stop loss at the bottom of the raid down here and an objective above. So why didn't I take this first entry opportunity, and why did I take this second RMR opportunity? Well, if you have a look at the time, it was exactly 10 o'clock when the PMI high impact news was released. So obviously I'm not going to be opening any positions on the release of news. I'll give it at least a few minutes to get the initial volatility out of the way before I start to look for a setup. But if we disregard the news, we can see we have a bullish RMR setup over here, and in that bullish RMR setup, that's where we found our short-term bullish RMR setup. So in these scenarios, we have an RMR within a larger RMR, that would be a higher probability setup. And another criteria for an A+ setup is during the raid leg, if price raids liquidity and also reaches a key area. So in this case, price raided and also reached a gap on the left, as well as reaching a bullish order block on the left. By raiding and by reaching, this became an A+ raid. All right, last two questions. This will be over shortly. Don't worry, I won't take too long. So question 3 is to comment on relative strength between EU and GU. In a lot of my videos, I've been using relative strength to compare the indices together. However, I've got a couple comments on how to apply relative strength on Forex, so EU and GU, but the principle is very similar. At the exact time of your entry, I'll draw a fib from the bottom of the raid to the top of the market structure shift, just to get an idea of how deep price is retracing. So price on EU has retraced just around 70% at 10.16. Here on GU, if I draw that same fib, we can see that at 10.16, price has retraced almost to 90 or 100%. So just with this quick comparison, we see that GU is weaker than Euro. And in hindsight, after this entry, GU was very bearish. It was very weak. However, here on EU, after 10.16, price was quite bullish. It was much stronger. So just applying that relative strength between EU and GU, that would have been the difference maker between a winning and losing trade. I just want to say that the way I use relative strength for Forex on EU and GU is slightly different than the way I use it for indices. Because with EU and GU, we have the luxury of a cross pair. We have a pair that compares Euro and Pound, the Euro Pound. And so if you're doing a separate analysis on Euro Pound, if you determine Euro Pound to be bullish, then obviously EU is more likely to be stronger than GU. But that'll be a topic for a different video, since I could talk about that for ages. But if you're a frequent EU and GU trader, if you've got some brain power left, I'd recommend to check out EG and to do some experimenting with that pair to help your decisions. All right, final question, number 4, is to comment on the sentiment prior to your entry. Really briefly, if we zoom back to the start of the day, price is obviously bullish, right? All the liquidity underneath here is being left untouched. So during specific times of day, we can expect a break in sentiment. What that means is during this bullish trend, we have a lot of retail traders going long, and a lot of them are going to be trailing their stop losses at recent swing highs. So people who are longing and longing, they're going to be trailing their stop losses at these recent swing highs. And so during a news event, it is very likely for the sentiment to be broken with the purpose of stopping out retail traders going long. And so I'll give you a choice. Would you rather go short to take out the sentiment, to take out the retail longers for a short-term move? Or would you like to wait for sentiment to be broken to find a bullish move targeting a more key area? This will be completely up to you. However, I prefer to target key areas, but this bearish trade idea, just based on breaking the sentiment, you can see we also have an RMR that's been presented in here. We can see we have a short-term raid, short-term market structure shift, and a return into a gap if you placed a short in there, stop loss above the raid, and objective at areas of liquidity or areas of gaps over here, then this would also be a winning trade. But that'll be it for this video, guys. If you made it this far, you're one of my favorites. Don't forget to leave a like and subscribe if you enjoyed this video, and comment if you have any questions. If you'd like to join our community Discord, it'll be the top link in the description. Feel free to join, come say hi, and meet some like-minded traders. It could be a very valuable learning tool. But until next time, take care, everyone. Peace.